This is interesting.
Awesome. I love it. Ruben, I know you're having a good time because when somebody takes a training, for 2 times, for a second time,
He's in love.
if you're willing to sit here for hours and listen to me again, you must be having a good time.
Yeah, no, it's always good to rehear because even though you think you see or you understand everything, your memory doesn't get so much. And if you hear it twice or even 3 times, you always catch stuff that you might think you know, and then you realize you don't really pay attention the first time or the second time. So it's always good to refresh. For me, it's something that is normal.
Awesome. And by the way, Dina, in the future,
Mhm.
whenever I have another one like this, I will also let you know. If you want to review, you'll have access to review again. Okay.
Okay, thank you.
All right. So point number two is market structure, and just like a house, when you're gonna build a house, typically everything starts with a dream, right? You have a vision, you have an idea. I want the second story to have the master bedroom on this side, 3 bedrooms on that side, but where are the bathrooms, and the floor. You start envisioning the floor plan, so then you can talk to an architect who's going to, before doing anything, they're going to do the blueprints and they're gonna do the designs, so you can visualize. In other words, you can externalize your internal vision, you can bring it out, and then you see the blueprint. There hasn't been placed a single brick on the lot. You don't even know where the lot is gonna be yet. You don't have a land, you haven't picked it up. Oh, well, maybe you do at that point, who knows? But my point that I'm making is that before you start sending the construction people out, you first understand the framework. You first understand what is going to take, for the house to be built. What are the dimensions? What are, all of that needs to be carefully planned before you say, okay, I love it. I give you the green light, and you write the first check for 30, 40, $50,000, so they can start sending people out to the property and start building. With trading, kind of works the same. Before you pull the trigger, you need to look at the conditions of the market. You need to be able to envision where the market is and where are the boundaries, where the second master bedroom will be. Well, you need to know where the price is. And if you have a vision that your master bedroom is on the third floor, on the corner to the right, well, if you have a vision that your desired price is, let's say, 30,000, and right now is at 29 and a half, then you know that your vision is, it's not good for me. I like it at 30. I want that room on that corner. I'm not gonna settle with the room in the middle because that's not what I wanted. When it comes to market structure, you're going to find your place by understanding where is the best price to buy that you have already envisioned. And you do that by simply adding understanding the market and the structure of the market, the blueprint. Now, to do that, we said earlier on the previous video that there are different type of participants in the market. And you have short-term traders, you have swing traders, and then you have position traders. Short-term traders are people like us that we come in to the market and we go in and we go out in matter of minutes. sometimes in a matter of an hour to hour. If you got a good price and the trade is moving well, you might let it run and run and run, and that might be 2, 3, 4 hours. That is a short-term trader. A swing trader is someone that look at the market now and on Sunday night, and they say, well, I'm going to open up a position and I'm not going to touch it until Thursday, or I'm not going to touch it until Friday. And I need to pay this price. If the market is not at my desired price, I'm not buying it. So when you look from that perspective, when you look at the structure, you'll know if your desired is in accordance to the market. If it's not in accordance to the market, then you look at the structure and you make the decision. Is it risky to buy at this level and wait until Thursday? Or I might just be a day trader and just buy something now and I'll sell it in 30 minutes. That's the decision that you're going to make as you look at the structure. You cannot make that decision without knowing the structure. And if you have pockets deep enough where you can say, well, I'm going to buy now and I'm not planning on selling until the fall. I'm not planning on selling until, unless something happened, but I am only selling sometime around September. Then if you do that, then perhaps definitely you are a very rich person, and yeah, because to do that, you need to have a
A
lot
lot
of
of money.
or you need to be a bank, which that's how they do mutual funds. That's how they do it. And so you know that they're handling millions and millions and millions and millions and millions of dollars, so they can afford to do that.
Okay.
Now you cannot do that if you don't know the structure. How do you determine the structure? How do you read the blueprint? Where do you start? Because if we're trading as day traders, which is what we are, if you're trading 30 minutes, 15 minutes, 5 minutes, where do you start? How do you know the structure? Well, everything starts with the daily and the 4-hour chart. That's what 4H, by the way, Dina. When you see me on Telegram saying 4H, what I meant is the 4-hour chart. If you see that me or Ruben said there is an entry on 15 minutes, then that is a 15-minute. But if he says there is an entry on D, D is for daily. And so this is Trading View. And I'm going to put you a link, Dina, because I want you to open an account. It's free.
Okay.
You don't have to pay. And then that way you get access to this chart.
Okay.
And once you get access to this chart as a member of this group, I'll give you all the calibrations and settings for you to be able to see your charts just like this.
Okay.
Because everything that you'll see has a meaning, and I set it up in a way that is going to help you make decisions. But there you go. It's on Telegram now. It is Trading View. You click on it later. You open your free account, and then you're going to be able to start looking at different markets.
Okay. Thank you.
Sure. By the way, Trading View, just so you get some background on it, it is, in my opinion, one of the best web applications for charting. And once you open your account with the broker, you're going to be able to get a live feed on futures contract.
Okay.
They without a broker's account, you can only see on TradingView is a delayed data. So it's 15 minutes behind for people that don't have a contract. Don't have
Okay.
okay. But what I love about this, you see right here, I'm trying to show you, well, let me show you here. These are my watch list.
Hold on, I
What
don't see it. Where is? Hold on, let me move the camera. Maybe by the
oh, am I
camera.
sharing? I thought I was sharing.
Where is my mouse? Okay, I don't see.
What do you see now?
I'm seeing the trading view. Is your watch list a future that you have on the left, or is that your right? Okay,
Yes.
okay.
So you have all this. Now, with trading view,
Hmm.
if I want to see stocks, you can see stocks.
Oh, cool.
That's why I like it.
Uh-huh.
Because check it out. I just click here on my watch list for stocks. And if I want to see right here,
Hmm.
this is Six Flags. Look at that beautiful chart. And it keeps all the settings.
Oh, cool.
But even better, by the way, I'm thinking, Ruben and Dina, this is a small commercial break. I'm thinking to really work on the yearly subscription, the one that is on Sundays, to dedicate Sundays on the yearly subscription to review stocks and cryptocurrencies and futures for swing trades. But not much futures, not a lot of futures, mainly stocks and cryptos.
Oh, that's cool.
And I'm thinking because those are more for swing trades or long term,
Hmm.
so we can spend Sunday nights reviewing the markets in cryptos and stocks to open swing trades for the week in those places.
Good idea.
I thought it was nice. And so if I can see you guys like it, you let me know. But I think that I'm going to do that because the way the market is moving, I think we need to have our eyes in cryptos and in a couple of stocks. But cryptocurrency is a there are people making millions of dollars daily on cryptocurrencies right now, and so there are some buying opportunities. If I show you this is my crypto watch list,
Okay.
and again, this class is not about crypto or stocks, but if you guys want, we'll make it on the yearly thing, and then we'll do Sunday nights like that. But these are my cryptos. I do have on my phone some other cryptos that I haven't updated on this watch list. But just to give you an idea, this one right here, by the way, I owe this one. I have about 100 of these or 200. This is Ripple. This one, no, which one is OX? I don't have it here. And I've been watching this one. And this whole weekend, oh my goodness, it moves so nicely. Is it this? No, that's not it. Anyways, I don't want to get. Anyways, I don't want to.
But can I ask you something? But the one that you do as you know, what broker you use for the currency? Coinbase or?
Coinbase here in America. You are in outside America, you're gonna have access to some very nice platform for cryptos. Very nice platform. Here in the United States, we're restricted, especially Dina and I, we're in North Carolina. There is a very, 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 very nice broker that doesn't allow North Carolinians to trade on their platform. I know. But thing is this. Anyways, there was one. Yeah, this is the one. Look, if you change this, look how nice it looks. Check this out, guys. This one, this right, you know how much is this right here? It
No.
was 18 cents.
Oh, that's pretty cool.
18 cents, and it went up to 22 cents.
Uh-huh.
Wow.
You buy $500 worth of 18 cents, you can make some good money. If
Yeah.
if you buy 1,000 or 2,000, imagine. And this is just an example.
So do
Uh,
you, with the cryptos, do you also do like, because you're not doing long term with them, right?
I'm kind of are. I'm not trading like I trade futures. Like I do more swing to long term.
Oh, okay.
I have some Bitcoin. I have some Ripple. I want to buy Ethereum. I want to buy Litecoin, and I want to leave the money there for a while.
And
Okay.
which one is the other one? What is the name of the other one that you, the OXT?
Yes, but let me make sure that's the ticker symbol because it doesn't look. I have it on my phone. I don't think it dropped like I saw that one dropping, but it is. It was at the same price, and but if you guys want, and we do the yearly focus on that, we might even trade in the night cryptos. There are people, as you both know, and Ruben, I brought you up to speed with that, and Dina, I told you on last time we talked that I am practicing my Shabbat now, the Shabbat.
Yeah.
And so I'm not touching or I'm not doing anything money related on Fridays and Saturdays. But there are traders, and I've done it in the past, not very actively. They trade futures Monday to Friday, Sunday to Friday, and then on Saturday and Sunday they trade cryptos.
Oh, and the cryptos are open all the time?
24/7, they never close.
Oh,
I
I
don't know
didn't
much
know
about
that.
cryptos.
Even when there are holidays like 4th of July, the crypto still trading.
Oh,
Really?
Yeah,
I
the
didn't
crypto,
know that.
because remember, the whole thing that why crypto is so popular is because they are not centralized. They are
Okay.
decentralized.
But all of them or just Bitcoin?
Most of them. The essence of the block, I don't want to get distracted, but the essence of blockchain is that it's not centralized. The centralization is moved away. Now, to your point, Ruben, for example, Ripple is centralized because it's centralized by the banks. But for the most part, they don't. They are not. They all behave uncentralized, meaning that they don't close and you can trade them all the time.
And one more question about that. If you have, for example, the broker, in which coin or which currency you have the account in Bitcoin, or you can have it in US dollars, or what is, because for example in Coinbase you have to have it in Bitcoins, right?
Yeah.
But you see, the thing is, every time that you trade, if you make good money here, but when you switch it back to, you know, to Bitcoin, then you might lose a lot of gain of the money that you make, because when you switch it, it's not going to be the same. Sometimes that happens. You see that when somebody of the coins goes up, and then the one that you have in your Coinbase goes down, it's a mess. You see what I mean? For me, if they have it in US dollars, that would be good. You know what I mean?
Yes, thank you for asking. I don't want to make the video about conspiracy theories, but you know that there is a conspiracy going on that they're going to get rid of the US dollar as we know it,
That's true.
and they're going to get rid of cash. And they already created the US dollar crypto. And you can transfer your money in US dollar into US dollar digital, and then you can buy and sell any crypto using US dollar digital. And if you use the digital US dollar, it maintains, it's pegged right now, as right now, it's still pegged to the dollar that we have currency. So $1, regular dollar is the same as a regular digital dollar. So you don't have to lose by selling it into Bitcoin, for example. You just, if you like this one is the one that I was looking for, and I missed it. And I missed it because it was Sabbath, but I'm okay. God is my provider. So, yeah, because I saw it moving on Friday, and look at this move. It went from 21 cents, and last night it got to 55 cents.
Wow.
In a day and a half. And Dina, you're going to learn how to read these charts. And this is Ichimoku trading. Look, Ruben, you that know how Ichimoku moves, look how clear was the signal right here. It was above the cloud. I mean, it moves so much that look how big it is, I mean, the candles. Right here. And then it went up. I'm not looking at the divergence because the divergence work a little different with them. And these are more driven by fundamentals. The cryptos still move by fundamentals and technicals as well. But the Ichimoku gave you a very clear signal to ride this wave all the way up there.
So is the Nuchimuku the top one? The Ichimoku, is that the top one?
Ichimoku are the lines that you see.
Oh, okay.
Yeah.
Okay. I was like, okay. So where did Ichimoku told you to sell it? Like, so I'm looking at the lines at the
Don't
top.
worry about it. You're going to learn it later.
Okay.
Yeah. I'm just, again, this was supposed to be a 30-second commercial break.
Oh, okay.
Now it's becoming an infomercial.
It's an infomercial, okay.
No, but it was a very good signal. It was a really nice signal.
Yeah, you see this. Look at the price, and then look at this huge candle. Look at the volume. Look at the divergence. Look at the volume, and it went from 20 cents to 26 cents in 1 hour. It was perfect. I mean, here you can buy $1,000 at 26 cents. And just to give you an idea, I know we all like to see it, although just to give you an idea. So if you buy $1,000 of that, divided by 0.20, it gives you 5,000 OX. It's called, this crypto is called OX. And then you sell the 5,000. Let's say you didn't do the whole 58 cents. Let's say you got happy when it reached 50 cents times. You made $2,500 in 1 day.
It's not bad.
One trade.
Beautiful.
One trade. And is swing trade, you leave it alone. But I have news for you. The cryptos are the future. And the cryptos, you can leave that $1,000 there. If you're not, Dina, if you want to just leave $500, like I have some with 5, you leave it there. A lot of these cryptos that are 30 cents now, they are going to be worth $100. They're going to be worth $50, $80. So if you buy at 20 cents and you leave it there for 2, 3, 4, 5 years, and they become one of those that are the, even $20, if you bought it at 20 cents, your $1,000 is $100,000 or $200,000 gain.
Yeah, that's true.
And that's why people are making millions on cryptos, because there are so many cheap cryptos in the pennies that you can buy $1,000, $2,000 and flip it over the weekend. Imagine flipping $1,000 into $2,500 just from Friday to Saturday and Sunday morning.
That's not bad at all.
You know. So, anyways,
And before we forget, do you remember the broker that is outside the states that I can use or no? You gotta look
I'll
for it.
put you the link. I'll send you the link later.
Oh, okay. Yeah, I just wanted to find out information about that. I like that.
Yeah, and Dina, you can.
Mm-hmm.
That broker is also open in US, but not in every state. Some states do, some states don't. So when I put it in there, if you're interested, you check it out. I use Coinbase, which it is open in every state, and you do have, quite a few cryptos to trade from.
Okay. It's called Coinbase.
Coinbase. I'll send you the link later too.
Okay.
Actually, yeah, I'll send you the link.
Okay.
So let's go back to futures, guys. We're talking about market structure. And look at the ES, not only close the gap,
Yeah.
now it's just going up.
So, Louis,
Yeah.
you talk about the top chart. What about the bottom? So you have the one in the middle and the one on the bottom. So do you pay attention much to them?
Don't worry about it. You're gonna learn those in the next 20 hours.
Okay.
That's you want everything that I do, you're gonna learn it. And you're gonna
Okay.
learn what I read, what I look, how I look, why, all that.
Okay.
So, but that is way ahead of us.
Okay.
So this is the market structure right now. By the way, if you are a long-term trader for position trading, then not even the daily might be a good starting point. Then in that case, you may want to start with the weekly or even the monthly. Like those people that they look to buy the S&P or sell it and not get rid of that contract until, December or so, just roll over every time the contract expires, then they might be looking at the monthly. Because if you look at the monthly, like this is what I'm looking right now. Number one, look how clean it looks. This is the monthly chart, and every bar represents 1 month. Every bar.
Every
So,
bar?
yes. So look at this. This black one right here is 1 month. This is another month. This is another month.
A beautiful triangle.
Beautiful triangle. Okay. But we are in a very strong resistance right now. Look at that area.
Yeah.
Very strong resistance. But if it breaks, we might go to the all-time high again, which it was 33 or 3400, 34 and 10. 3410 was the all-time highs. And it doesn't hurt to trade swing trading, or even what we do as a scalpers, to just look at the monthly chart, because it gives you kind of like an idea of that blueprint where the market is. And if you notice something that actually is the first time I see, looking at it from the monthly perspective, Ruben, do you notice that if the market never got into the bear market territory?
Mm-hmm. It actually was rejected.
It actually was rejected. Very interesting.
Yeah. It went down, but it couldn't hold it, and it was, back, like halfway back. So that's a very strong bounce. Very strong bounce.
So
And
Pause a
Yes,
second. So you see how, so you on January 1st, 2020, where the line is at right now.
right here.
So is that the price that it was? Is that the highest price for that month, or is it just, how did they pick which one to put up to represent that month, or are they taking an average?
Oh no, this is the actual level that the price went on that month. So
The
if we look at
highest,
it,
or because like say for the month you have every day.
Yeah, you
right,
got the
that's this
30
is,
days.
yeah, this is for the month. So let me show you this. Let's say I'm gonna make it real big so you can see that.
Okay.
Let's see, January 1st came in, New Year's, and the price actually opens where the previous one closed. Of course, there's always a small gap. I mean, comparing to the big, 30-day window of an entire month of trading. And the market, let me get my pencil so I can paint here. I can give you some coloring, and let me use a nice color. Let's use blue. All right, so the market opened here, and that was in this January 1st.
Okay.
Okay, let me just make a smaller line. Where this market closed right here, that's where this market opened. It actually looks like it opened with a gap down. Well, it doesn't really matter to be too specific right now. But let's say that it opened there. No, actually, it opened right here. It opened with a gap up. How do I know that? Because the end of the body remained black. It just came. So you see the body here, it still was black. That means that this candle closed in below the open price. So the price was there. The price, we don't know just by looking at this, if it went up and then down and then up, or if it went down and then up and then down. What we do know that in the entire month, the price opened here, and at one point, this is the highest that it got, and this is the lowest that it got for the whole entire month.
Okay.
Okay, so it went up and down. You see, like right now, this is where we are right now. This is the candle right now. You see that?
Mm-hmm.
Look how it's going up. Now, on the monthly, this thing is going to move very slowly. It still is going to move, but you're not going to see the up and down, up and down, up and down. You just see one candle because the formation of this candle is going to take the whole entire month to produce.
Okay.
Okay, then this, you know what? Now I can tell you something that the possibility that it did drop, that it went up and then down is highly probable by looking at the following candle. Because here I see that the price opened, went up, went down, went up, but it remained below the opening. Then the new candle, February, opened up right here. And apparently, the people that saw this candle here, which this is a signal to buy, you'll learn that later, don't worry about it. This type of candle tells you that the next one is a buy-in signal. They rally the market all the way until they got there. And then people sold their positions and they came back there. Now, the market coming February, they open here and they probably try to push the price higher again. And it did went higher. It went even higher than the previous month high. And then it closed, the highest for the month was there, which is in the 3,400. And then the price dropped. It went through the open, and then it just kept going and going and going and going and going. And that was in February.
Wow.
Now, why the movement was so scary? And by the way, remember how I said earlier that the two motivations, greed versus fear, fears move the market faster. Right here, you can see it perfectly. Look, if each candle is a month, to get to this price level right here, actually, let me delete all of that. Look, this is the bottom of that month, and this is the bottom where it got, the same level. But to get to, let's just put it right here, it took 1 month, 2 months, 3 months, 4 months. This is, let's just remember, this is greed, and we're just calling it greed. It took 4 months to get here. But panic came in on February when, wait a minute, there is a virus coming our way from China. The world is ending. Oh no, let's sell, let's sell. And in 1 month, it erased 4 months worth of movement in 1 month.
Wow.
So this can illustrate that statement.
You can see it.
How going up takes longer. When people get scared, the market
Yes.
drops real fast. And
Yeah,
this,
and,
yeah,
and just to let her know, but those candles you see like that, but they are huge. They're really a lot of money in each of those.
Yeah.
oh, absolutely.
Those
Uh,
are hundreds of ticks.
Actually, to add more to that, you're looking at thousands.
Of thousands of ticks.
Check it out. To prove Ruben's point, if you guys get a calculator, I'll get the calculator, but it's very easy to know. Just look at this. Where's my calculator? I want to tell you how many ticks roughly were there. Where is? Okay. Oh, it's supposed to stop this. Okay, so check it out. What was the highest? Let's just type 3,400.
That's like 3,400.
Rounding it up. What was the lowest?
About 28.50.
2840. Is it 2050?
28.50.
So 3,400 minus 28.50. 500 points. Those are not ticks. Now,
Times 4.
Times 4, 2,200 ticks. If you would have sold here, which is almost impossible, and you let it ride the whole month down, and you only had one contract times 1,250, which is how much the one contract is worth per tick, that was $27,500 in 1 month.
Wow.
One contract. And I told you that I like to trade 3 contracts. If I would have sold with 3 contracts, I made $82,000 in 1 month.
Wow.
3 contracts. You see how much money it's at stake that you can make or you can lose? It's insane. It's insane. It's you know. And so, and by the way, this kind of money, there are traders, the big traders, they do this by the minute because they'll buy 100 contracts, and you'll see that, Dina, when you see traders putting one order with 500 contracts, and you know they put 500 contracts, $12.50 per contract per tick, and they take 50 or 100 ticks with 500 contract. How much money is that? It's insane.
Yeah, it's a lot.
And they are traded that's what they make every day.
Yeah, I saw the one. It wasn't a kid. It was like probably a 30 years old guy that sold the house, and he was waiting for Brexit, and
Okay.
he catch the Brexit
Oh, wow.
just exactly right and got out exactly right, and he made in just those 3 days $43 million.
Oh, wow.
That was in the news. The guy.
That's crazy.
Yeah, that's but you gotta have the the temple to, the temper to lose your house. You see what I mean?
Yeah.
If he would have made a mistake and he didn't catch it, you gotta get the guts to do that.
Yeah,
But
you're like, you're done.
yeah,
And Ruben, I'm glad you're saying that, because again, that goes proving what I said earlier, that when it comes to risk, if you take big risk, you have the opportunity to make it big,
Big return. Yeah.
but you also have the opportunity to lose big.
Hmm.
And let me tell you this, there are two types of thinkings when it comes to money management, especially, and this is not part of that class, but I'm gonna give this to Ruben because he's already trading. Um, there are the traders, the traditional traders, and what we hear in the retail market is, oh, never risk more than 2% or 3% or 1%. And that is absolutely great advice. But you're not going to become rich overnight doing that. The ones who make, leaps and bounds in the market, they risk most of the time, like that guy that you're mentioning, the Brexit, he risked it all. And so there are traders that they say, okay, I'm gonna put in the market. Of course, Dina, I would not recommend you to do this until you've been doing this 4 years, 5 years, you know this inside out, and you say, okay, I'm gonna put in $50,000 in this trade. But if you blow $50,000, you're not a multimillionaire, you might get hurt. But if you score right, the $50,000, you might turn it into a $500,000 by the end of the day.
Hmm.
You know, uh, and they are traders. That's how they trade, and for them, that's normal. They have a $5,000 account in their mindset, their trading mindset, and their risk tolerance. They're risking the whole 5,000 in one trade. You know, um, there is a way to trade like that. That once you know what you're doing, let's say you have liquidity in your bank account, you have $50,000 that you can risk, but you're not going to risk the 50,000, but you want to be riskier, and you know what you're doing, and so you put in your trading account, let's say 3,000, and you say, today I'm going to risk all 3,000, and then your goal is to make the 3,000 into 25 or $30,000 in one day. Can you do it? Absolutely, you can do it all the time. And traders that trade, they trade that, and some traders trade like that. They don't risk the whole 50,000, but they have it in account A, they have 50,000. But when the day opens, they move from the 50,000, 3,000 into account B. And when they put in their trade, they know that 47,000 are safe. Nothing is going to happen to that because it's in a different account.
Hmm.
The 3,000 on that account is all in. And so they made their trade to turn 3,000 into 10 or 12 or 15, whatever. But that's what they're looking to do on a daily basis.
Hmm.
And that, once you're comfortable with this strategy, you're making wins, you're maintaining green days, you know how to read, you know how to feel the market, you know the levels, then you can start playing like that when you have enough money to say, well, if I lose 3 grand, it's gonna hurt me, but it's okay, I'll survive, and so they keep on. And so they keep on trading.
Okay, that makes sense.
All right. But the important thing, Dina, that I guess that unintentionally, and for those who are watching this video afterwards, the unintentional objective of this conversation is when you trade futures, you have unlimited potential, and your risk is limited if you manage it well.
Okay.
But you can make so much money in one day of trading with so little of risk. And I give you another example, Dina. You that trade stocks. If you were to trade stocks, day trading stocks, to day trade stocks, number one, you need to have $25,000 on your account in order to be able to buy and sell multiple times a day. And if you were to trade stocks that day and you have 25,000 and you buy, let's say, whatever amount of shares of X company, but you're risking the 25,000 and the whole movement puts you in profit of 10, 12,000, and all of a sudden the market sink and it goes all the way, then you lose, you are on paper, you are on red for the whole entire amount that you had in that account. Versus when you trade the way I've just told you, you have those different accounts and you move it in and you're risking this. Technically, you can do a similar process for stocks, but again, you're gonna need to have a lot more money because you need at least 25,000 to be able to day trade.
Okay, that makes sense.
So anyways, so do you get the point of opening and closing and then this being the monthly movement of the S&P? And so Ruben, and also for you, Dina, but Ruben now, we hardly look at the monthly. But when you are like on the first week of the monthly, it doesn't hurt, or the first day, it doesn't hurt to highlight the zones on the monthly. And just so you know, Dina, the market, they have sell zones and buy zones. And you'll find those zones by looking at the higher time frames. Remember how I said the big institution position traders, they buy at zones, they buy at the prices where they deem to be a good value for the asset. And so those are also called accumulation zones or distribution zones. And so when we look at this, and let me put it, actually let me do with this. Okay, it's giving me all this color. By the way, this is my actual chart for trading. And now that we're looking at the zones on the level, look how different it looks. This versus this. This one candle, let me take those colors out. This one candle are all these little candles, because here we are going on the basics for day trading. But you see the zones here marked? Those are the same zones that, let me use another chart because I do have them already marked. I don't know if you can see it. Actually, let me not. You see that right here, that green area? That is a zone that I have it on the other charts
How do
broken.
you know it's a zone?
Good question. Thank you for asking. Okay, and to illustrate that, let me put it in red. Let me adjust this for a second, and then I answer your question. Because I think it'd be good to pull this up all the way here. That's the highest of that week. Okay, so how do we know where the zones are? So when you look at the monthly or the weekly or the daily, look how different they look. This is the weekly. You know what, Ruben? Ahí viene una explosión, man. It's at the top of the cloud. It's been doing, you know, a triangle here. But if it breaks this area, brother, if it breaks the 30, if it breaks the 30, the 3,000 area.
The 3,000 area, yeah.
And
blow.
And well, it's gonna have a lot of resistance all the way to 3,100. So 100 ticks, 100 points will be a lot of up and down. But if it breaks up with this, look at this, look at the volume. This thing is gonna shoot big time. And you'll understand in a minute, Dina, but I'm just want to take the opportunity to tell that to Ruben, because this is an interesting, very, very interesting level.
So you think it's gonna shoot upward like that because what? What happened in the previous months?
Because of what these are, and we're gonna see it in a minute. You see right here. Right now we are on market structure.
Mm-hmm.
Then we're gonna talk about power levels, statics, and dynamic. And these are levels that they move, and some of them are fixed. This gray shade cloud that you see here, that's a dynamic level. The borders are area of resistance in the top, and the bottom, the borders are areas of support. So look how this cloud is going up here, and it's about to enter into this whole zone, and it's gonna touch the top of the cloud, which is gonna be resistance. So to break through, that's what is called a breakout trade. And there are traders that's how they trade. That's how they trade. They only wait for the breakout moments to take place and then go ahead and trade, you know, the market.
When you say trade, you mean on top of the cloud, that's when they would buy?
Some traders, that's when they will buy. Typically,
why wouldn't they buy when it's inside the cloud or under the cloud?
The best area to buy for more passive traders is in the bottom, right?
Right.
We buy in low. The aggressive traders, they like to buy the breakouts because if you put pressure on a bottle, on a 2-liter soda can, and you shake it and you put pressure, short-term traders, not position traders, short-term traders, they love, once you open that, all that pressure, they love it because the price moves very fast, real far. So if you know how to trade the breakouts, which in the strategies that I use, I'll teach you some tools to do it. In fact, actually, the strategy number 1, which is called the drachma, it only trades triangle patterns and breakouts, which I'll show you that. That's what it mainly trades: triangle patterns, breakouts, and in supports and support areas, and so in the resistant areas. And when you look at the volume at that point, and this breaks on short-term frames, it moves a lot real quick, okay, before it goes back down. So a lot of traders, they only capitalize on that quick move after the breakout. Then they make all their money like that. Just give me a second. Let me send a quick text.
Yeah, one thing, around 8:30, I have to leave the meeting. So
Okay.
if you want to get going, that's good. I'll perhaps.
We'll miss you, my friend. Okay. Okay. So, by the way, Ruben, a tip. If you want to take, and there's nothing wrong with doing this, if you want to take less trades so that you don't pay that much commission, and you want to trade better trades, you can trade on a lower time frame, or the chart that I need to give you, the new one that I have. You can trade from the level at a higher time frame, like the weekly, or even as you saw there, the monthly or the daily. Does that make sense? So
Yeah.
when you see this, like for example, look at this bounce on Kijinsen right here. Now, it wasn't really that much down, but once you see this candle coming down, but you look at the volume was going up, and there was divergence on weekly, and then you color that area on the chart, and then you make that your entrance, you know that you will have a greater chance to have a maybe 4 or 5 hour trade that is going to make you money all those hours. Does it make sense what I'm saying?
Yeah.
For example, right here, if you know that it's coming into, let me hide this. If you know you're getting close to, now that you know on the weekly chart, you're getting close to the top of this cloud and the top of this bar, will you be buying here on the lower time frame?
You're asking me?
Yes.
No.
Exactly.
I will be selling actually, at least to get a little bounce to see how far I can get down.
Exactly. Because chances are, by the way, Dina, the breakouts doesn't just happen, oh, it's coming, and then they break. They
Because I was
typically,
gonna say, I would have thought you would, like where you have the cross there. Go back.
yeah, I'm gonna point it in a minute. I know what
Okay.
you're talking about. It's right here. Oh, okay. You know what? Let me hide this. Yeah, I don't want to delete those colors, but yeah, you're talking about like right here or right here.
I was talking about right there because that says May 11th. That's tomorrow. I would have thought I would want to buy it where it's at right now because it's going over the cloud.
Right.
But then you
And
said no.
yeah, you only buy when it's the right time. That's why I said it is a breakout strategy that you have to wait for the right time when it gets to these levels. But the first thing that happens, it typically never breaks through. The first thing, once it hit this level, it drops because it's like it's finding a wall, and then it drops several points, and then the people who are buying here, They closed their positions, they made their money, and now everybody start evaluating whether it's worth to break it through, or we're just gonna ride back down all the way down here. But if you, as you learn to read the volume, which you're gonna read that later, you're going to know if the buyers are not backing down. They wanna break it. And you know by the amount of buying pressure, they put in pressure, pressure, pressure. Imagine that brick wall, you hit it with a pick or a hammer, and it opened a small, hole. But now you have hundreds of people, they're all coming, and everybody's hitting the same wall, hit, 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 hit. Why are they doing that? They want to open a door to go through. But if you see one guy hit it, two guys hit it, and that's it, guess what? It's going to drop.
Okay.
Okay? But the good thing is, the more pressure they put here to break it, that means more people are interested in breaking it, and they're pushing, 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 and eventually it breaks. And when it breaks, you have an stampede of people running, rushing, and that's why it moves so fast after the breakout.
Okay.
All right. But for long trade, swing trade positioning, or long trade positioning, that might not be the best, because those breakouts, it breaks and then comes back a lot of times, and it's called a false breakout.
Yep.
For long-term positioning, you buy right here at the bottom. So that way, when it goes up, if it fails, it comes back down to the middle. You're still not losing anything, and then it goes back up, and you're riding all of that because you're long-term.
Okay.
All right, so market structure. The first thing, notice how we were able to identify with Ichimoku. Ichimoku is the indicator that shows you this cloud, this blue line, which is called Kijinsen, this green line, which is called Tikensen. And as part of the next level, that is not an static, it is a dynamic level. Tikensen and Kijinsen, cloud top and cloud bottom. And I'm just illustrating that when you know Ichimoku, just like Ruben and I just did, once you know Ichimoku, you can quickly see where the market is heading. You know by looking at this bullish cloud that the market is heading upwards. And we know that Trump and his people will do whatever it takes to make sure the market, by the election time comes, is, or at least looks, as strong as it can. Okay, the economy needs to be rebuilt, it needs to be looking good. But by looking at this chart, it never became a bear market. We only had a correction based on the monthly. When you look at all this work and we dropped it here, all we had is a correction, and now we are above on the, look at this, Ruben, by the way, on the Kijinsen, on the monthly, that's where it was the bounce, together with Tikensen. So if you were trading for the month, that was a perfect trade. And by now you have almost 2,000 ticks in profit with one trade. And so, any questions? Well, so far we good. Perfect. All right.
I don't think I'm like, I can talk to it yet, but I guess as we go through it, I would understand it better.
Yeah. And then I'm going to tell you what Kijinsen is and Tikensen and all of that better. Right now, I'm just telling you, when you see it like this, that is an uptrend. This right here, it became, actually this move, which was in 2008, Actually, let me show you that. Look at the difference. Once in 2008, it became a bear market for maybe a year. And then, no, let me correct that. It was a bear market from the minute that it went under the cloud until it went above the cloud. So it went up below the cloud from January 2008. I'm sorry, from November 2008 all the way until November 2011. So 2 full years of bear market. You see that? Here, it hasn't stayed. So we're not in bear market yet on a monthly basis.
Okay.
All right. So when we know that, let's start setting the levels, and then we're going to do them from the daily and the 4-hour, which are good enough levels, will show you good enough levels to day trade like we do. Like I said, the monthly and the weekly is good to look. We were able to see that. But if we look at the daily, in the daily, the market did went into a bear market. You see that?
Because it went under the cloud. Yeah.
It's below. So when people were saying, oh, we entered a bear market, they were not being inaccurate. They were actually accurate. On a daily basis, we were in a bear market. But check it out. On a daily basis, we are now above the cloud, which means we are definitely entering into a bull market. And we entered the bull market back in...
Is that the 20... The 21? Where are you? 20.
That's April 30.
30.
So at the end of April, beginning of May, you know, right here. And look at this, Ruben. Look at how Kijensen on daily is pointing up. And look at the divergence, which it was very clear here. When the market got to the bottom, look at the big divergence that was there. So let's set the levels on the daily. Right now, you know, I'm going to have to open another chart because I don't want to delete. You see, I have the levels here. Look how good those levels are, but I want to set them off from scratch with you. So I'm going to open up a new trading view. You guys need another break or you good? I know Ruben needs to leave in 10 minutes.
Yeah.
So maybe in 10 minutes, Dina, we take a small 5-minute and then we'll come back.
Okay.
Okay. So So what we're looking at now is the daily. Let me get rid of this. Let me get rid of this, all this. Okay, so now we have nothing but the chart. And by the way, there are traders that this is called naked chart. This is a chart that is naked. It has no indicators, nothing on it. And there are traders who this is how they trade. They don't like nothing. They don't like no noise. They just look at it and that's how they trade. And it's valid if that's their style. It's valid. Our trading style, it is almost the same idea, but we use some other tools to be more precise in what we're looking at. But you know, once you are a good chart reader, like I just told you earlier, looking at those stocks out of the heat map, and I show you by looking at that graph, you know, this already paints a picture. But if you are here, you know, and you don't see divergence, it's very hard to predict that drop. Although, you know, for all of us, that was a very unpredictable drop. That's when the market dropped. But it is hard if you don't use some of the other tools that, you know, we use, like these ones right here. But for learning to set levels, we're just gonna leave it naked. And as we set the levels naked on naked chart, let me take this out. This is an alert. All right. Now, when you look at the structure, you want to know what is the high. Let me go here. When you look at the structure, you want to know where is the high and where is the low. That's what the HL stands for. Whenever you see an H and L, that's what we're looking at, high and low. That's where you first start when you're doing your analysis for market structure. And you start doing that on the daily. Why the daily? Because the daily illustrate all the trading activity until yesterday, especially if you do that at the beginning of the session that we're doing now. All the trading activity until yesterday. Because each candle, remember that, each candle is going to represent whatever the time frame you have here. So if you are on the daily, this candle is 1 day. If I go on the 15 minutes, look how they are way smaller. And each candle represents 15 minutes of movement.
Okay.
All right. So do you see all this up and down that is here? Notice when you look at this, you don't see that.
Right.
Why? Because each candle represents
A day.
the whole day of this up and down, up and down, up and down. And so how do you set up those levels effectively? Well, that's why we start on the daily, because you're going to set up the high of the market based on the day worth of trading and the low of the market based on the low of trading. And so if we look here, just looking at closely, we can see that right here is the high, right, based on this stretch. This is what we call this a rally from the bottom all the way here. All right. Now, I anticipate based on this and what we just talked about on the principle of selling at the high, that when this candle gets to, we're gonna know 29, between 29.60 and 29, almost 66, we're gonna see price dropped. It will drop. Even if you push a little higher, it will drop. Why it will drop? How do I know that? Well, because remember how I said at the beginning, Dina, that price, the charts are a reflection of human behavior. And so this action here, these wicks, and I'm going to talk to you in a minute about wicks, all these wicks represent indecision. This area, this price level from 29.89 to 29.16 is an area where position traders comes in, long-term trader comes in, short-term traders comes in, and so there is a lot of activity. And when you see the wick represent, look at here, price came down, came down, came down, came down. The next day, open up a little bit, came down, and it didn't hold. And the buyers pushed the price up, open up on the next candle the next day. These people drop the price again, the same ones that dropped it here. But the buyers from here, they say, no, we want the price higher. And they push, 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 push. And then we have the wicks. That's when sellers begin to push, more push of the seller. And look what happened then. It just sank again. So this area where you see all these combinations of wicks becomes an area of interest where sellers got a good fight with buyers. And in the previous area, which is this one, from where you are today, there was an intense fight that the sellers won. And they pushed the price down. Now, that is a very dangerous area. It is more dangerous than this one. This was another small area. This is another small area. And this was a big area. But this one is a dangerous area. And it's a dangerous area because price, remember what I said about the N wave, and look what's look what could happen here. I'm not saying that it will, but an N wave starts from the top, drops, drops, drops. That's the first leg. Then it retraces somewhere around 50%. If we do Fibonacci retracement, I'll tell you later about that. This looks more like a 61%. It's a little more than 50. But if the N wave is in play, that's why I said that is a dangerous spot. Because if it is in play, the N wave theory says this run should be the same size as this one. So if you are here, and we're gonna draw a line similar to that, then that's what you got. You see that?
Mm-hmm.
Now, that's why this is an area of much interest and we gotta be very careful how you trade this. Why do you think is that, Dina? Why do we have to be careful? Okay, obviously I just told you why in the reference of where the price can go. But why that area is an area of interest?
Because they're watching they're looking at the market to try and figure. Oh, are you waving?
I'm saying waving. I'm saying
okay.
goodbye to
Bye, Ruben. Sorry.
I'm sorry about that.
I was looking at the chart. Sorry, Ruben.
Go ahead.
Good
Have
night.
fun.
Thanks.
Bye, man. Thank you.
Is it because they're looking at the market right now? Because some people would, well, people who are really truly understand what they're saying, what they're looking at, they're like, okay, it's gonna go down because it's the object is gonna go down to where C is at right now.
Exactly.
Yeah.
That is a
The
possibility.
possibility doesn't mean it's gonna get there, but that's a possibility.
Because since the market moves in N waves, right? Remember, it never goes straight up, it never goes straight down. It goes up and down. And the movement, the ups and downs, they form N waves. If you are in trading, we call them a whale because they're huge, right? So let's say you are a $100 billion hedge fund, and you're about to put in $500 million in work orders to go and short the market. As a whale, as a long-term trader, these are the areas where you buy. Remember, as I was telling you, the zones for the long-term traders. In futures contract, the long-term traders are gigantic. There are whales. And if they're going to look for a high price to sell, this is a place of high probabilities for that to happen. Not here, not here, but here. So right now, it is very, very early to say that, but it could actually happen sooner than later. Why? Because another pattern is also forming. Let me delete this. And this one, I'm going to draw the line. And we're going to learn more about patterns in later classes. But I want to take the opportunity that we're talking about this. There is something called the head and shoulder pattern. And that means that you form a shoulder one, then you go higher, you form a head, you form the second shoulder, and then it goes down. And it can go down as low as this area, or this area, or this area. And for the big whale that I mentioned to you earlier, it doesn't matter if it goes here. And you know what's going to happen here? Price will bounce. But for a big whale, if it bounces, typically it will bounce from here all the way to the next level, and this is the next level. So if it bounces here, goes here, and then it keeps going down. For the big whale who bought here, this is nothing. Who sold here. If you're selling here or selling here and it bounced, your account is going to go in the red. But if you did it here, it's not going to go in the red. So
say that again. I didn't understand. So you erased it. No.
I'll do it again.
You see where you had it at the top there where the pink is at? So you said if you bought it when you were at the pink there.
If you sold it.
Oh, you sold it. I thought you said you bought it. I was gonna say that didn't make any sense to me. Okay. Yeah, if you sold it there, you won't be in the red because you don't have it anymore.
Exactly.
Okay.
Well, no. Remember, you are shorting the market. You do have it. You're making money on the short.
But you sold it.
Right. So right now, your investor mentality kicks in. In stocks, you sold something you have.
Right.
In futures, you can share it even if you don't have it. So you are profiting on that move. You see right here on the dome? I can put a sell order right now, and as it goes down, I'm making money.
As it goes down, you're still making money even though you sold it?
Yes, because you make money on the short side or on the upside. Remember, that's what we talked on the previous video, that is a huge advantage that you have with futures that is hard to really understand and do when you do stocks. Because right now,
Because I'm thinking when you sell it, you don't have those shares anymore. It's gone.
but not here. Here, you are selling a position from a contract at
Mhm.
one level, and until you don't close that sell, you are making money because you're selling at a higher level and it's dropping, and you're gonna then let somebody buy it from you that is going up at a lower level.
Okay, so you have to close the transaction.
You Here you have, we call it a round trip. For if you go up, that's your entry. That's also called long. You
Uh-huh.
go up, you buy. When you sell with a short order, and that closes your buy position. Is called a round trip. You entered and you close, you finish the trade.
So if you forget, I guess you can lose a lot of money that way too.
In fact, when you
Okay.
open your trading account, let me tell you this. They're
Okay.
going to ask you if you know what you're doing, because futures contracts are considered to be sophisticated assets that they only allow sophisticated traders to trade.
Okay.
If you don't know what you're doing, they don't approve you the account. And,
Okay.
now, of course, they want you to lose your money. So if you just, it's not like they're going to interview you or do a background check.
Right.
They're just going to ask you, do you know what you're doing? Do you know? Simple stuff like that. And then
Right.
they want you to fund it. And if you lose the money, they still make their money on commission, so they don't really care. It's not like they worry
Right.
about your money. But the essence of the message that is sophisticated assets is because you can make a lot, you can lose a lot, you have a lot of flexibility, but trading stocks is like riding, and don't get me, I'm not diminishing it,
Mm-hmm.
but it's like riding a pony. Trading future is like riding an unbroken stallion, you know.
Okay.
And so it is
It's a
wild.
different beast.
It is a different beast. Absolutely, absolutely. But I was looking to see if I have a shot to put a trade, but I don't like it. Right now it's moving too up and down. There is
But you
no.
wouldn't just look at the dome right to put a trade. Wouldn't you look at either your 15 minutes or your daily to see what it's doing before you put the trade in?
You're absolutely right. But sometimes depends on how clear it looks.
Let me
Like,
ask you a question. When I'm looking at the dome now, how come, see, on the buy column, it says 52% and then it says 123 contracts. On the top on the sell, it says 48%. Why is it in percentages instead of contract count? Did you set
that's
it that way?
right here 50, right here 54. That's what
Yeah.
I'm talking about. Because that is showing you, and I set it up that way. This right here shows me who has more strength in the market. Where are more orders? Right now, there are 55, 54 sell orders, percentage wise. There is more sell orders than they are buy orders, but not by far. They're almost identical.
Okay.
But when the market is dropping, like it dropped here, you will see here 80%, 20%. What that tells you.
80% want to sell and 20% only buying.
If you say on the sell side, 80% of the orders are selling
Yeah.
and 20% of the orders are buying, what that tells you.
So that tells me a lot of people are trying to get out the market right now.
A lot of people are selling, selling,
Yeah.
selling, 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 selling. So if you see 80 here and 20 here, why will you buy?
Why would I buy?
Yeah.
Because let me think about it this way. So if a lot of people are selling, um, would I buy it now because maybe the price would be, well, I don't, they don't call them price here. The
Yeah,
ticket,
you call it price. You can say, yeah, it's price.
because the price would be lower because the demand is not as high at the time.
Yes, you want to buy low. But if
Yeah,
you see 80 here and 20 here, remember the falling knife. You don't try to catch it.
you just let it drop.
Well, you join the 80, you sell it. Remember, you
Oh, you
can
sell it
sit.
because it's dropping?
Right, you ride the wave. You never go against it.
Oh, so if I buy, I'm going against it.
Absolutely. You
Ah,
you have 100 soldiers. I mean, let's say you have 80 soldiers at 80%. If you have the option to pick a fight, 80 against 20, who has the chance to win? A
I guess
bigger
the
chance to
80.
win. So you want to join the 80s.
Oh, okay.
When it gets to the bottom, and then you all of a sudden you see, like right now, 52, 48, that's an even fight.
Yeah, they're close.
So that
Okay.
means it's not going anywhere. It's in a range. It's
Huh.
up and down within a very short range.
Okay.
That's why I have that number there to give me a visualization of the strength in the moment as I'm trading in the moment.
In the moment.
Because
Okay.
this number is irrelevant if you're swing trading.
Yeah.
Because if you're trading for 5 days, right now there might be 80, but you know that in 20 minutes from now, in 2 minutes from now,
It might
the
be different.
buyers might take ownership. It doesn't matter. Then you buy the zone. Remember,
Mm-hmm.
when you're longer train, then you just worry about more on the zones where the price is, rather than this type of movement, because it doesn't really matter because you're looking long term.
Okay.
All right. Let's take a small 5-minute break, and I'm going to stop this part of the video. And then we're gonna have the last section, the last part of the video, the last part of the video, and I'm gonna draw some more, some supports, and then I'm gonna start teaching you about the areas and the wicks, how they are interpreted, and why here, what I will look to see if I'm ready to short or not. Okay.
Okay.
So let's take a 5 minute, and I'll be right back. I'm gonna get another cup of coffee.
Okie dokie.